Is it big trouble for Apple stock? AAPL is the ticker, and the stock was down 1.5% today, while the major indices rallied strongly, up over 2% due to central bank intervention in England. And I think the reason why you're seeing this divergence with Apple, where underlying Apple stock is coming under very slight pressure, is talking about the supply chain with the iPhone, talking about how Apple ditches iPhone production increase after demand falters, where an anticipated surge in demand failed to materialize. That should be a little bit alarming for investors. They're talking about how they told suppliers to pull back from efforts to increase assembly of the iPhone 14. Total units in question around 6 million units is the delta. So they're still expecting to produce around 90 million units, 90 million iPhones during the period, during the quarter, which is roughly flat versus the prior year. There is some important mix shift, however, where the suppliers are saying, hey, demand for the Pro unit remains really strong. However, the entry level and sort of mid-market, that you're seeing a bit more weakness. That makes sense with what we've been talking about on this channel, Unrivaled Investing. If this is your first time tuning in, please make a point of hitting that thumbs up, hit that subscribe button. And the key aspect that we've talked about over and over on this channel is when you're talking about stagflation, that hurts a lot of folks. That is a regressive tax. So the lowest income folks are hurt the most. And what you're seeing here is effectively, hey, when you're having trouble paying your energy bills, paying your food bills, paying your rent, you're less likely to buy that new entry-level iPhone, that entry-level smartphone. And that's what they're saying. So we're saying, hey, the higher end folks, they're still going to get their Pros. They're no problem doing that. But you are seeing the weakness with sort of the everyone else with the iPhone 14. And that is a very interesting point from suppliers. So then the question is, well, how much of an impact does that mean for Apple stock? Well, you can see the iPhone by sales is somewhere between 40-50% of their sales in recent periods. In the most recent quarter, it was only one of two segments that was actually growing, when you can see that the Mac, the iPad, and wearables were actually all flat or down slightly year over year. However, the other sort of nice segment that is growing, at a good clip is services, growing around 12%. This includes Apple Care, the cloud, digital content. And so it is interesting to see, okay, so the iPhone's effectively flat, maybe you get some pricing increase, new models, and you're seeing services grow, everything else sort of flat. So you're only translating into around 2% revenue growth. So what's the impact when we think about it? Well, I mean, it is important to understand that products actually have much lower margins than the services. So really the iPhone has, maybe 30-40% gross margin when you're thinking about it, whereas the services that you're getting, that's much, much higher margin. You can see how that margin has been expanding over time from, let's say, high 60s to low 70s. So it's not as bad. So every, let's say 1% cut in new iPhone sales, it's not necessarily as bad as, let's say, 1% cut in services. So as long as their underlying services segment still is growing, that should help drive the business. So it's not completely terrible. And it is worth understanding that you do see these sort of speculative rumors around the iPhone production, cycle, supply chain. This happens, the ups and lows, the highs and lows that are sort of saying, hey, this is terrible, this is great. Just in May, they were talking about how, oh my goodness, the iPhone production plans for 2022 are 20 million units lower than the consensus estimates, representing zero growth, talking about a perfect storm, for in terms of launching this year's, iPhone lineup. So you're going to constantly see these headlines about the iPhone production cycle, rumors, I'd say mostly. I mean, some of it has validity, but really, I mean, when that article came out, the stock was around here. Subsequently, over the ensuing weeks, it rallied 20%. So I personally don't put a lot of weight on these headlines. What I instead want to focus is on the fundamentals. What's going on with Apple? So where do I think Apple goes in the future? Well, if you're struggling with this investment environment, consider unrivaledinvesting.com for new ideas and a community of like-minded investors. In full disclosure, this is not financial advice. And so when I think about Apple's execution and I look at their fundamentals, I think they've been doing actually a really solid job. You look at, they've been taking market share, not only in the US, which is where it counts because it's such a big market, but also globally. You can see that iPhone share has increased. So they are gobbling up market, growing from less than 20% of the market to about 25%, from 2018 through 2022. So that is what I like to see, increasingly taking market share. And now they represent the majority of US smartphones. So that is a big deal when you look at the market. And I think, hey, from an execution perspective, this still is, it's still quite solid. And this is an aspirational brand. This is a strong brand with pricing power that people like. So I look at this and I think the fundamentals for Apple are still quite strong. When I look at the most recent results, I look at it and I'm saying, thumbs up, very, very solid, especially when I see that you're taking share. However, when we start digging into the financials, it's a little bit more of a mixed picture, especially in the most recent quarter, where you can see their operating profit was actually flat year over year. You can see their earnings was down slightly from $1.30 the prior year to $1.20. You can see they are buying back lots of stock, how, their shares outstanding went from 16.8 million to 16.3 million. So that has been going down. But overall, because they have been buying back so much stock, this is a company generating 90 billion plus in free cash flow. Buying back that stock, they have seen an increase in their diluted earnings per share for most of the year, from the year to date, June 25th, 2022. So the first 3 months, because they have this wonky calendar or wonky fiscal year. So overall, still growing earnings around 10%. But in the most recent period, it came under a little bit of pressure as the sales growth didn't really materialize and they had sort of ramped up some of their expenses. When I think about Apple's valuation framework from here, penciling out, let's say 6 to 12% growth this year, penciling out 26 to 30% margins. Currently, they're around 30% margins. Maybe it goes higher with more services revenue, but if you look back at where they were within the last few years, you could see somewhere closer to 25%. So I think it's prudent to have some sort of range on how you think about valuing this business. I'm saying 26 to 30%, trying to have a reasonable range. Currently, stock price a little under $150 a share. Currently, effectively trading at a mid-20s earnings multiple. So that is not crazy compelling, in my opinion, when you're saying, hey, here's a company growing earnings at 10%, and you're effectively trading at a mid-20s forward earnings multiple. The question is, what does growth look like in the years ahead? I don't have a strong pulse on saying, hey, this is definitively going to be growing at 9% or 12%. So I look at this and I think the risk reward isn't super compelling, because I assume, hey, let's assume 5 years from now, you have some sort of multiple that ranges between 15 and 25 times earnings multiple. Maybe 15 is too conservative. I want to have a range of assumptions. And if you have 15 times earnings multiple 5 years from now, you're effectively looking at a negative return for the stock. And once again, this is a hypothetical framework. Of course, stock price can go way higher, way lower. I just want to say, hey, what's a rational basis of, what are rational assumptions I can make? And that way I can roughly pencil out what I think it could do. And if I think it could do much, much better, I want to understand exactly what I'm penciling out. So the scenario where it does much better, where let's say you assume it effectively doubles, you're effectively saying, hey, this can get to, let's say, teens earnings growth over the next 5 years, and it stays around a 25 times earnings multiple. So there's no valuation contraction, and you're effectively returning all their free cash flow to shareholders. So then you get around 15% annualized return. And so I look at this and I'm thinking, overall, Apple's an incredibly strong business. There's a reason why it trades at this premium. I am cautious, however. I don't think that sort of symmetry in terms of the upside versus downside doesn't strike me as super compelling. After all, I'm effectively saying, hey, if things work out, you're penciling out 100% upside. If things don't work out, maybe it drops 30%, maybe more in the near term. And that doesn't really strike me as super appealing. Then you layer on other aspects like, hey, there's higher interest rates. Hey, there's higher inflation. And when you factor in these things, it makes me think you should get a potentially lower valuation. If you were to have, let's say, investors start thinking, well, if interest rates, let's say, are closer to 4%, the Federal Reserve is raising rates. If interest rates are closer to 4%, then maybe stocks should be closer to 6-7% yields, in which case, what's that imply for Apple? I'd argue a lower valuation. Then the inflation component means, hey, you could have, input costs that could be challenging for investors potentially over time. It's possible that they raise the prices, but it's because their input costs are challenging. So I look at these different components and I'm sort of saying, this is not a clearly compelling risk reward at this point in time. I personally, for my own investment journey, which I call out at unrivaledinvesting.com, I'm looking for the things with more asymmetry, something where it's like, hey, if this really does well, there's 600% upside. And by the way, I'm covering my downside with some sort of liquidation value. So I look at this and I'm saying, I understand what's going on with Apple in terms of why the stock today was down slightly, and I could understand why it could sell off. Even now, if it were to sell off, it's just not at that super compelling level yet. Now, I am, sort of cautious as well, thinking, let's say 5 years out, because you have some technologists like, let's say, Ray Kurzweil, Sam Altman, that are effectively saying, yeah, we think there's going to be language models that are going to be on par with human intelligence by 2027. That is a game changer, folks. In which case, does it really make sense that the value that you're buying is the hardware, the smartphone, or is it really the software? Like in the future, if in let's say 5 to 6 years from now, you can have virtual assistants that you could say, hey, this is pretty close to human level intelligence, that could potentially help me out with scheduling something on my phone or booking a reservation or something like that, or doing some job for me. And so you think about that aspect and you're saying, hey, that's going to happen later this decade. What does that mean for a company like Apple, where it's still, I'd argue, strongly driven by this core product, this iPhone? And what if you have a player like Google, who I'd argue is stronger with artificial intelligence, sort of leap ahead and sort of say, hey, we will sell our smartphone at cost, or a small, premium, but to the actual cost of manufacturing it. But the AI is just mind-blowing relative to what you could get from Apple. Now, what I'm talking about is a sort of existential risk that you are not seeing right now. Right now, you're seeing strong results from Apple, and they're still taking market share. But it is something, as an investor, that I want to be mindful of in the periods ahead, to sort of watch out to see what happens. If you enjoyed this video on Apple, please make a point of hitting that thumbs up, hit that subscribe button, and thank you for watching Unrivaled Investing.